Are you a medical professional and thinking about doing contract work full time or part time? Then you've come to the right place. Welcome to the Locum CPA podcast, where we talk about the business of being a locum tenens medical professional. I'm Stephen Lee, a certified public accountant. As a locum tenens doctor or professional, understanding your tax obligations is crucial. The truth is, many locum tenens doctors and physicians, nurses, psychologists are oblivious to the tax pitfalls that can cost them thousands of dollars. I see it all the time. But today, we're going to challenge this and change that. By the end of this podcast, you'll be equipped with the knowledge to avoid common tax mistakes. Remember, as a locum tenens professional, you're already familiar with the unique lifestyle that comes with this career path. You're constantly on the move, taking on new assignments in different states, different hospitals, and juggling multiple paychecks. But what you might not be aware of is that each state has its own set of tax rules and regulations. This can lead to a complex web of tax obligations that's easy to get tangled up in. For instance, some states require you to file a tax return even if you only work there for a few days, while others have specific rules for deducting expenses. In this video, I'm going to go over the most common mistakes I see locum tenens professionals make. So let's get right into it. Mistake number one is a misclassification of worker status. The pitfall is basically incorrectly classifying yourself as an employee rather than as an independent contractor can lead to significant tax issues. The solution here really is understanding whether your engagement qualifies you as an independent contractor or an employee. Remember that independent contractor, you're going to receive a Form 1099, or as an employee, you're going to receive a Form W-2. So always ask, are you an independent contractor or an employee, whether it's through your recruiter or is that at the hospital group that you're working with? So 1099 versus W-2, and this is going to affect your ability to deduct business expenses and your tax liability. So it's really important first to make sure that you don't misclassify yourself, whether you're an independent contractor or an employee. You have to know the difference. Number two, the second mistake that I see many locum tenens professionals make is neglecting estimated tax payments. The pitfall here is independent contractors don't have taxes withheld from their paycheck. Once again, if you're an independent contractor, you don't have taxes withheld from each and every one of your paychecks, leading to a potential shock when tax time arrives come April 15th, right? When you file that tax return. The solution is to submit and make quarterly estimated tax payments to the IRS, as well as to the local state government if required to avoid underpayment penalties. These payments should include income tax and self-employment taxes. And I'll leave a link to my video on how to calculate your quarterly estimated tax payments. So make sure you watch that video where I go step by step on how to calculate your quarterly estimated tax payments so that you can avoid costly interest and penalties. Are you about to, or have you started your locum tenens practice? If so, I have my top tips on how to start and operate your locums practice. Check the link below. I have my tax tips there. It's a few pages, but it's definitely going to be vital for you to know how to start and how to operate your locums practice. For those of you who are already experienced, you also still want to see those tips to make sure you're doing the things the right way and operating your locums practice. All right, mistake number three is overlooking state tax obligations. The pitfall here is navigating the different tax laws and regulations that apply to locum tenens, physicians, or professionals. For example, did you know that some states have specific rules about how to report your income, or that there are special tax credits available for healthcare professionals like you? It's a lot to keep track of, and this is one misstep that I see that a lot of new as well as experienced locum professionals make that can cost you a lot over time. The solution is track where you work and understand the tax obligations for each and every state, including whether you need to file a non-resident state tax return. Okay, let's go over an example, a real life example here. Dr. Smith is a doctor who worked in several states throughout the year. Dr. Smith was diligent about keeping track of his expenses, which is very good, but he didn't realize that he needed to file a tax return in each and every state he worked in. So as a result, he owed thousands of dollars in back taxes and penalties. But if Dr. Smith had taken the time to understand the tax laws in each state that he worked, he could have avoided this costly mistake. However, he didn't realize that he needed to file a tax return in each of those states. So he only filed a return in his home state. The other two states caught wind of this mistake and sent him a bill for back taxes and penalties. Unfortunately, Dr. Smith was devastated and he had to pay out an additional $30,000 to cover the costs. And this is many times I see cases like this where a locums professional will come to me after the fact. They've been trying to do their taxes on their own. They've been trying to track their expenses as well as states that they've been working on, calculate their quarterly estimated tax payments, trying to do all the right things. But they were unaware that they need to submit taxes, whether to another state that they worked in that's outside of their home state, or they weren't keeping track of it correctly, or they didn't file a tax return on time for that non-resident state. The moral of this story is really clear. Understand the tax obligations is crucial as a locums professional, and you have to take the time to research the tax law in those states or find a knowledgeable CPA that can help you navigate that, okay? So don't let this be you. Mistake number 4 that I see is failing to deduct business expenses properly. The pitfall that I see is that a locum tenens professional is not keeping track of their expenses because you're constantly incurring new expenses from travel costs to professional fees to education expenses. It can be tough to keep track of what's deductible versus what's not. And to make matters worse, the IRS has strict rules about what constitutes a legitimate business expense. So, what can you do to ensure that you're taking advantage of all the deductions you're eligible for? The solution here is to keep detailed records of all business-related expenses, such as travel, lodging, meals, licensing fees, continuing education. Those are some of the most common ones that we see for locum professionals. Be sure to distinguish between deductible and non-deductible expenses. Remember, a good rule of thumb is a deductible expense is something that is ordinary and necessary. Ordinary and necessary. Something that's non-deductible is typically personal expenses. Remember, personal expenses that are not directly related to your locums profession or your locums, the gig that you're doing, is not going to be deductible typically. There might be some expenses, and I'll go over that in later videos, that kind of teeter the line between personal as well as business, where you can deduct a portion of it, but not all of it. And making sure that the expense is ordinary, that's common in your profession, as well as necessary. Remember, if you like this sort of content, don't forget to subscribe and share this channel or this video with some of your colleagues, as well as other locum professionals who might be struggling and want to know about more tax tips for healthcare professionals like yourself. All right, let's go to common mistake number 5, which is a mismanagement of retirement contributions or a lack of retirement contributions. Remember, not taking advantage of retirement plans can lead to higher tax liabilities and lost opportunities for tax-deferred growth. What that means is basically, as a locums professional, if you're a 1099 contractor, you're operating a business, right? And that business may be eligible for retirement contributions, right? So whether it's a solo 401k, a SEP IRA, a traditional IRA, you want to take advantage of these tax deductions. Some locums professionals who are making into the 6 figures, potentially 7 figures, there's other accelerated retirement contribution plans that you can make as well that can really help save you in the tens of thousands of dollars, okay, every single year in taxes. So make sure you look into what type of retirement plan are you eligible for, whether it's Schedule C, S Corp, whatever it might be. Make sure you look into that and make sure you're planning as well as contributing to those plans, okay? Mistake number 6 is ignoring self-employment taxes. The pitfall here is underestimating the impact self-employment taxes has. And what happens there is you'll be subject to underpayment penalties, right, and interest. Remember, self-employment tax is basically a tax that covers Social Security and Medicare taxes. And the combined rate of Social Security and Medicare for self-employment taxes is 15.3% of your net earnings. Okay, you have to factor this in for your quarterly tax payments. So do not ignore that and submit that on a quarterly basis. Mistake number 7 that I see that's very common is inadequate record keeping. The pitfall here is really poor documentation, right? Can lead to whether it's a disallowed deduction. So if you don't have the documentation to back up the deductions that you're taking, that can lead to disallowance of that deduction, even if it was legitimate, if you don't have that proper documentation. So the solution here is to stay organized. Detailed records of income and expenses, and consider using an accounting software to really streamline this process. Some really popular ones are QuickBooks and Xero. You can use either of those two, whatever works, whether it's a Google spreadsheet, a Google Doc. And one tip that I do have that's a quick and easy way is in the tips that I provide on how to operate a locum practice, in there is really getting a separate bank account and credit card for your locums practice. Remember that credit card at the end of the year, they usually have a summary, an annual report of all your income and expenses. Use that, but make sure you're only spending from that business credit card for the locums, okay? Make sure so that you don't have to commingle funds, but at the same time, it really helps organize things. So that's just a really pro tip there for you. And number 8, the most common mistake that I see is overlooking deductions for health insurance, okay? So if you're self-employed and you're running your own business, you can deduct. The pitfall here is missing out on deducting health insurance premiums if you're a self-employed individual. And those deductions and self-employment premiums are really, or healthcare premiums are very high. We know that, right? So make sure you want to deduct that. The solution here is to make sure you deduct the premiums for health, dental, and long-term care insurance that can really help reduce your adjusted gross income, okay? So avoiding tax mistakes as a locums professional requires a combination of knowledge and diligence here. And by understanding the unique challenge you face, taking the time to research the tax laws in the different states that you work in can help you avoid these costly mistakes, okay? And I just want to thank you for watching. If you made it this far and you've gotten value from this, remember to subscribe and share this video with your colleagues, because I'll be continuously producing more and more videos for you locum professionals out there. I hope that this video is very helpful. I hope you have a wonderful day, and I will see you next time. Bye.